Guys, Mike here. October 24th, another really nasty day in the overall market. It's a bloodbath. Down over 600 points on the Dow. Today's weakness actually surprises me a little bit, actually caught me more off guard and surprises me more than even what we saw back in here. So like this down move, although it was a bigger down move percentage-wise, this action actually kind of caught me off guard. I really thought that we were going to hold this 200-day moving average. Once we started to consolidate in here, I thought we were going to hold this level. Looking back, hindsight, I should have known that we were going to crack because of how light the volume was on these two recovery days compared to the heavy volume pressure that came in on the big sell-off days. So here's your big sell-off days. Okay, and then you can see this little bounce back, this little recovery attempt. The volume was much lighter on that little recovery attempt. That should have gave me enough. And then you can see actually the two following days of consolidation, you can see heavier volume than those 2 days on the recovery. That should have been enough of a hint to me that we were going to actually have another sell-off day, and the markets weren't done. And then here it is. Okay, I'm ready to say that we're in, a bear market environment. In the sense of trading is different, the environment is different, the atmosphere is different, and I'm making some adjustments to my strategies and some adjustments to the way that I execute my trades, and I'm going to share those with you because I had a lot of people that have been asking me, what am I doing? How am I navigating in this market? Because I traded during the crash of 2008. That's when I worked at the hedge fund. And in 2008, I actually won a Trader of the Year award. I actually had a 36% return on my portfolio. So I've traded through bear markets before. I've traded through crashes and everything. And there is still a lot of opportunity. There's still a lot of places to make money. You just have to know how to switch up gears a little bit, and that's why you can't be a one-trick pony as a trader. Yes, it's always good to know what you're good at and know what your strengths are, but you also can't just be a one-trick pony. You've got to be able to trade diversified things and trade in diversified markets, because we've lived in a strong bull market over the last several years, and we're starting to get to roll out of that. Okay, and I think the follow through that you've seen, or lack thereof, that you've seen the last 2 weeks is, I think, directly correlated to the market doing this over the last couple weeks. I've had a tough time kind of getting anything going the last several trading sessions, and I'm going to make some changes. So I want to kind of go over those changes with you guys, so maybe you can implement them, or you can think about switching things up a little bit, because I think we're in a little bit of a different environment now, and I do expect the market to go lower. Now that we broke through this level, okay, which was this was our last, was a key support level. Now that we're clearly below this level, your next support level is not going to be until down here, guys, around this 260 area. Okay, and then if you get below that, then you're looking at 254.50, 255 down here. So these are your next levels. Okay, so I do think the S&P, not saying it's going to get there tomorrow. Well, it could. I'm not going to say it's going to get there tomorrow. We just had a couple companies report some pretty good earnings. Microsoft, Tesla, Ford, what was the other one? Whirlpool. But then you had a couple misses. Las Vegas Sands missed. I got to check to see what Visa did. I don't know what Visa did. I got to check to see what Visa did. AMD got crushed off of earnings. So we've kind of got some up, some down. We'll see what happens with the markets tomorrow, but I do think eventually we're going to get down to test this 260 level. So I don't think we're going to come out of this environment anytime soon. I think for the next couple of weeks, we're going to be in this sluggish downward action in the market where you're not getting follow through, you're not getting continuation. And that holds true in the small caps as well. So usually what I do, guys, when I sell out of my positions, I sell out of my positions in tiers. So let's say, for example, I own 10,000 shares of whatever. My first take profit is 25% of my position, so I sell 2,500 shares. My second take profit's 5,000 shares, so 50% of my position. My final take profit's 2,500 shares, 25% of my position. and I hold on to that last piece just in case we get to continuation, we get follow through. I'm changing that in this environment because we're getting one and dones in small caps and in mid caps. You're getting stocks are making one move and they're fizzling out. Okay, and that's because you're getting a lot more blanket selling pressure across the board in the entire market than you are getting continued buying pressure and follow through. Yes, there are some individual cases like today, LRN, monster day today for LRN, that gave you all day continuation and all day follow through. So a big day for that stock. That ended up even giving back some of its gains late in the day, but that's kind of like an individual stock situation, not something that you're seeing across a broad sector or a broad market. So I am now, instead of selling 25% of my position on my first take profit, I'm selling a minimum of 50% of my position on my first take profit. So as soon as I'm in a trade, when I'm in a trade and I get that first move, I'm immediately selling at least half of my position, maybe even 75% of my position, and I'm just going to hold one little piece in case I do get follow through. Okay, that's the way that I'm going to start to play longs. I also think you need to pay a lot more attention to what the overall market is doing. All right, on a day when you have the market down 300, 400, 500 points, you really need to taper your expectations to the long side. Okay, take profits quickly. Only expect one move. Do not expect follow through. Stick and move, focus on singles. Remove the home run concept out of your head. Okay, if you're looking to the long side. Okay, I will be shorting more things. I'm going to be short stocks that bounce. I like to short mid caps. I don't really like to short the small caps. But I will be looking to short more. I will be looking to trade options in the indices like the SPY, NASDAQ. I'll be looking to trade options both, on the puts. I'm going to try SPY puts down towards that 260 area. There's also the TVIX you can get long. There's inverse ETFs that you can trade. So there are still a lot of ways that you can benefit while the market's pulling in like this, but more so this video is talking about what I'm doing differently and what I'm going to change, and a lot of that has to do with the way that I manage my position size. Okay, I'm taking smaller position sizes to begin with. I'm talking about when we're going long. Okay, because yes, I will be shorting, but I realize that not everyone does short and not everyone can short. Okay, so if you're just looking to the long side, I want to tell you what I'm changing when we're talking about going long. And my position size is being scaled back. I'm taking profits quickly, and I'm taking more profit than I usually do, meaning I'm selling more of my position sooner than I usually would when we're in a bull market and we're getting follow through and we're getting continuation. Okay, be extremely patient, be extremely selective, only focus on A+ setups. Okay, literally make that setup jump off the screen and slap you in the face. Do not go after a B or C type setup, especially when you're talking about going to the long side in the market environment that we're in, because even right now, even A+ setups are failing. Okay, so don't waste your time with anything that's not A+. And if you have to look at that chart pattern and you're like, you're not sure if it's an A+ setup, the answer is it's not. Okay, if that chart pattern is not jumping off the screen, slapping you in the face, saying buy me, trade me, okay, don't bother, let it go. If you're unsure, if you have to ask yourself, is this an A+ setup? You just answered your own question. That means it's not. Okay, move on. Okay, stay disciplined during this correction in the market. Okay, this is not the environment to where if you get down in the morning, let's say if you're down, you're at you're down a good amount in the morning. This is not the type of environment where you should continue to push throughout the day and try to make it all back. Okay, in a hot market, I can go down, a few $1,000s in the morning, and I can still go after it because there's more opportunity and there's a good environment to where I can make it all back in the afternoon, and I can still trade. This is not that environment. If I go down a few $1,000s in the morning, I'm done. Okay. Oh, sorry guys. Sorry about that. My screen just went blank. So this is not that type of environment. Okay, so if I go down big in the morning, I've got to stay disciplined because you have to keep your losses manageable. I had a huge month in September. I had a good start of October, but the last 2 weeks I'm having a hard time. Okay, straight out. I'm not trading well over the last week and a half, really. Okay, or like the last 4 or 5 trading sessions, I can't seem to get anything going. So I'm focusing on really just staying disciplined, managing my losses, managing my risk, and now I'm going to switch my execution up a little bit to compensate for the environment that we are in right now. Um, and of course, I'll be shorting more, and I'm looking for put option plays and those type of things, and just put options in general on maybe some bigger names, and those type of things is what we can really look to do. And that's what I will be doing over the next several days, couple weeks. But I felt it was important that I came on and just talk to you guys a little bit about this, because it is different. Okay, this is not the same market that we had in July or August or September. We're in a different market environment right now, and you need to understand when the market shifts and that changes, because that does change the way that stocks move, and it does change the way that stocks trade. And if you're not ready for it, or you're not aware of it, you can really lose your ass. Okay, so I feel it's important that we talk about, when it's time to shift gears a little bit, and another reason why it's important that you're diversified as a trader and you're not just a one-trick pony. Okay, so that's what I'm going to be doing. I'll keep you guys obviously updated on kind of what's going on in my trades, and obviously what I'm doing, but that's going to be how I'm going to approach trading going forward for the foreseeable future, for the next several days to a couple of weeks. Okay, and I think we're going to get down, like I said, to that 260 level on the SPY. We'll see if we get there. I think we will, and that's it. All right, so good luck trading, guys. I hope this helps. And this is normal. Don't take this as like, oh my God, the world is ending. This is totally normal. Markets are cyclical. This is a deep correction that I think we're seeing in the market. I think we have more room to the downside. But this is not 2008, okay? So don't freak out. This video is not meant to freak you out. Just want to let you know that I'm shifting things up a little bit, okay? So I'll see you guys in chat tomorrow. Take care.